All right. So, what's going on in the crypto world? We had a crazy couple of weeks. There was a big jump in the market. Where are we now, Jonathan?
Well, there's been a bit of a downturn since we last spoke, Sean, and that is because the reason for the upturn and the reason for the downturn are essentially the same thing, or two sides of the same coin, perhaps I should say, and that there was a lot of belief that the Bitcoin ETF, and actually a number of them, were all going to get approved this week, and that did not happen ultimately. And so a lot of the excitement and a lot of the speculation has died back down, at least for now. And there's belief. The new sort of date that everyone's sort of looking at now is January 10th for when these things would be approved. And then if indeed we get Bitcoin ETF approvals by January 10th, then we're looking at Bitcoin ETFs actually in the market by February of this year. Pretty good, just in time for the halving. I say that doesn't sound too bad to me. And for anyone who's interested in getting in this market, congratulations, you were just given like a 2-month reprieve, before the prices go nuts. Because as soon as the ETF approval happens, it's likely to push the price up higher.
What are the current Bitcoin and Ethereum prices?
Well, I'm really glad you asked, Sean. Bitcoin right now is trading at $36,427, down 2% on the week. Ethereum trading at 1957, down 7% on the week. The Ethereum price had jumped pretty significantly when it had gotten out that BlackRock had begun the process of filing for an Ethereum ETF. But with the news that even the Bitcoin ETF hasn't been approved yet, I think everything's been tamped back down. Having said that, a month ago, Ethereum was trading at 1550. It's at 1950 now. So still way up from where it was even recently. And anyone who bought recently is feeling good about it. Feeling pretty good.
Congratulations, Crypto Fat Cat. We've been down this road, though, a few times where there's, these rumors that go around that the ETF is about to be approved and it isn't. And then it's pushed to some other, the next destination in the future. Which now sounds like it's February or January, as you said.
January 10th, yeah.
January 10th. So what is it that's special about January 10th? And isn't it just likely that this current SEC keeps kicking the can down the road and it is a perpetual cycle of, maybe in another 2 months they're going to approve this ETF?
It's hard to say for sure. The reason why this one didn't happen, at least and en masse, which is what everyone was expecting, is that all the applications are going to get approved all at once. Is one of the applications had to be delayed because there was apparently some more information or something was a little different from one of them. And then that apparently slowed down the whole en masse thing. That's what we're being told. Who knows what's really going on and why it's going this way? You ask a fair question that perhaps we're all getting a little ahead of ourselves. Perhaps we're piping up some of that hopium instead of being reasonable and realistic, where we might say, never in history has the SEC ever approved one of these things. Why suddenly do we think it's going to happen now? The best answer is that BlackRock has put out their ETF, and they always get their ETFs approved. And in fact, they've begun seeding that ETF, and they've now moved forward with the Ethereum ETF as well. That's all very strong signs that this is going to happen. It's essentially an inevitability, but the when is a little less clear, apparently. Like, it looked like it was probably going to be this week. It didn't happen. And maybe we were just wrong about that. It's hard to know how close it got, right? We're not there. We're not inside the halls. But I think ultimately, as someone who's a long-term holder anyway, I don't really care. I don't mind it taking longer because, as I was saying, it just gives me a chance to acquire more crypto at these prices rather than at the inflated prices that they'll be in the near future anyway, whenever that is. I think a ETF is nigh at some point or other. it's nigh imminent. I don't know if it's actually imminent, but I think it's inevitable, I guess, ultimately. Maybe it takes a year. I don't think it will. I know Kevin O'Leary, Mr. Wonderful from Shark Tank, was saying he thinks it's going to take 18 months. If he's right, it'll be a while. That'll be a nice goose just at the end of the bull market and maybe push forward a stronger bull market, a deeper bull market. Who knows? But he's the only one talking that way, to be clear, but he is.
Okay, so your thesis is primarily set upon the fact that BlackRock has filed for the ETF and that BlackRock has started seeding the ETF.
That's most of it. I mean, the fact that Grayscale, which is another major player in these ETFs, they run the Grayscale Bitcoin Trust, among other things. They took the SEC to court and won, meaning that they said the reasons that their ETF application was denied were not fair, and the courts agreed with them. That doesn't mean to say the SEC still couldn't deny them, but they'd have to come up with new reasons to do so. There were all the reasons which were absurd even at the time. They were eye-rollingly dumb, quite frankly. I'm amazed the SEC even decided to do that, but I guess it held everything off for a while. I always thought the SEC was doing this just to give traditional finance a chance to get in the game. And so now with BlackRock coming in, that's where we're at. But the talk, and the reason why Kevin O'Leary said what he said is that he said he doesn't think these things will be approved until there's an exchange that is fully regulated and complies with everything the SEC wants. And right now, BlackRock's custodian is Coinbase, who's been in a fight with the SEC for a long time. So the SEC may be less inclined to move that way. At the same point, they just never say no to BlackRock. So, I mean, we're going to see.
Okay. Anything else happening? Obviously, that's the big news. That's the big sort of area of focus. But outside of that,
I mean, it's hard to even think really beyond that. It's still, even with the big downturn in the last 24 hours or so, as people have come to realize this isn't happening, and some of the speculative buying, which I think where people are doing short-term trades to try and take advantage of this, buy the rumor, sell the news kind of a thing. They're selling the news, but it's like not so great for them. They're losing money on the news instead of making money. But it still hasn't been a huge downturn or anything like that. And it's been a bad week for us crypto holders. It's been a fabulous month, like the last 30 days. Everyone's doing incredibly well. We're loving life. As I mentioned, Ethereum is up, like 22% in the last month or something. Like Bitcoin is up some large number as well. Not as large, but still, 10% or something like that. And this is true as you go down the list for all the other cryptos, they're up much more. All the smaller stuff is up significantly more.
Okay, so most of the crypto enthusiasts, most of the crypto world sees this as just a delay and a slight speed bump in something that they believe is almost a certainty and going to really impact the price action in the near term, coming into this year where the halving is happening March, April time. So potentially, if things go according to the cryptos bros plans, there's going to be a huge 2024 for Bitcoin, Ethereum, and a bunch of these altcoins.
Yeah, exactly. And the belief would be from people like me that even without the ETF, we're going to have a really big 2024 because it's going to be around the halving anyway. That's usually going to push Bitcoin prices up 6 months after the halving, usually to all-time highs. And when that happens, everything else moves too. And there's new excitement around crypto. And we've seen this before, right? We've seen this the last two cycles in 2020 and 2021, as well as 2017. We've seen this. So the belief among folks like me is that that's probably just going to happen again anyway. And then the ETF could just be like a nitrous booster to rocket us on up to the moon that much faster.
So I read a couple of crypto articles this week. One of them, both of them, I think were in the Wall Street Journal. And one of them was an interview with Kathy Wood from ARK Investments, where she was talking about a number of things, including Bitcoin. They asked her to give a price estimate. And I think it was something between, that on the top end, it was 600,000 to $1 million was her estimate of, each individual Bitcoin. And one of the things that struck me is with both of those articles, I love reading the comments. And I went down through all of the comments, and it was a solid 20-1 of people who were just like, this stuff is garbage. Total Ponzi scheme. I can tell you what the eventual value of Bitcoin is going to be. It's going to be zero. These things are worth nothing. Yeah. And then occasionally you'd have someone who would like pipe in with like, actually, you guys don't know what you're talking about, and digital gold or something like that. And that person would then get shouted down in the comments with a multiple replies of like, keep deluding yourself. So does this concern you that, in a kind of a mainstream financial paper, Wall Street Journal, that you have so many people, and it's not just in Wall Street Journal, it's in, Bloomberg, or Bloomberg, maybe a little less so. They have a crypto section. But the overwhelming sentiment seems to be that this stuff is garbage, and eventually, what's the real big use case for this? And it's just basically the greater fool theory of people just buying in fear of missing out. And you, Mr. Crypto Enthusiast, Mr. Crypto Fat Cat, say to that what?
I mean, you're taking the temperature of the general public by looking at internet comment sections. That's the big takeaway for me. That's your big, like, this is how everyone's feeling. Internet comment sections. The only people who comment in internet comment sections are people who've got way too much time on their hands and are looking for fights. That's it. So I'm not saying there's nothing to be gained. Why, do you comment on them yourself? I see your face. You don't look happy. I'm not saying there's nothing to be gained by looking at the general sentiment of the responses, but I don't think that necessarily represents an impossible narrative that we somehow have to overcome and won't be able to do because the public feels so strongly. I think there's the 1% of people who do this. They know in the comments, they're always going to take a very strong opinion. I'm not surprised that the Wall Street Journal readers, Wall Street Journal, which is historically anti-crypto anyway, that the Wall Street Journal readers would be pretty darn anti-crypto. They're all, pro-bank, pro-normal capitalism, pro-this, pro-that. None of this is a surprise or weird or anything, and I don't think it has almost any meaning at all. If you told me Gallup did a poll, and it was, or maybe many polls of, Bitcoin's approval rating, let's say, the way they do with the presidential approval rating, and Bitcoin approval was at 15% or 12% or something, that might start to mean something to me after a while. If they did this many times and it was always coming in around there, I'd say there's a lot of, I don't know if it's education or narrative or PR or something that needs to be done, or just a killer app that has to be created so it just makes sense to people, right? Just like there were a point when many different technologies didn't make sense to people, and then they suddenly do. The internet's a good example. Cell phones are a good example. Cable TV is a good example. Electricity is a good example, and so on and so forth. So I think that's the way this is ultimately all going to work. Like PayPal's going to introduce their stablecoin. People aren't even going to really realize they're using crypto, a lot of people, but they will be. And then at some point, they'll start to see the extraordinary value it gives them and the utility. And then it'll just all make sense. That's my belief.
Okay. You bring up a fair point as far as the internet comments section. I will say that, I think that the internet comments on something like the Wall Street Journal or Bloomberg, or it's a little different than your, like, let's say, run-of-the-mill comments that you might find on some sites that are, can be pretty outrageous. So let's look at a Gallup poll.
Oh, okay. You have one?
Yeah. So I got two.
Oh, shit. I didn't know this. All right. What do you got?
We've got one from last year that asked people, I think they talked to 1,000 people for this survey. Yeah. And what percentage of people think, the different asset classes are the best long-term investment? Bonds, real estate, CDs, stocks, mutual fund, gold, or crypto. Yeah. Real estate, this is again 2022, was 45%. Stocks and mutual funds were 18%. Gold was 15%. CDs and savings account 10%. Crypto 8%. Bonds
Not
3%.
Bad. Oh, we're crushing bonds, baby.
That I found really interesting was the real significant differences in this survey just over the course of 1 year. So a year later, there was a fair amount of change that took place. Real estate went down just over 10%, down to 34% of people. Previous year, it had been 45%, who thought that real estate was the best long-term investment. Maybe because real estate prices have gone up so much and people are seeing it a little bit more as unaffordable or as a bubble. I don't know. Gold jumped up from in the mid-teens up to 26%. Mm-hmm. Stocks hovering around the same area, around 18%. Savings account and CDs went up significantly, which I guess isn't that much of a surprise given interest rates.
Exactly.
So that was up to 13%. Bonds jumped up to 7%. And crypto
same thing, right? Interest rates
dropped, same thing. Crypto dropped from 8% down to 4%, who thought it was the best as a long-term investment.
Let me ask you a quick question. What was the date of the 2022 poll when they released it? Can you see that?
April. They were both in April 2022 and April 2023.
So is this right after the Luna crash? because it was right after it might have been right before the Luna crash, because Luna crashed, I think, in April of 2022, right? So if this was just before the Luna crash, and then since then we had the Luna crash, then we had the FTX thing, it wouldn't be shocking that people would be a little less trustworthy of crypto. And then you also have inflation and interest rates going up, so people feel way better about bonds and the like, and savings accounts and things like that too. I would love it to be higher than 4%, but I don't necessarily see that as a big problem either at this point. That's not it isn't. I don't know. I'd be really curious what millennials have to say about it and what Gen Z has to say about it. Really curious. I'd be surprised if Bitcoin was losing to gold and those two demographics, for example. Really surprised.
Yeah, I think that you're probably right about that with those two demographics. I would be more interested in what are fund managers and financial advisors, like what are their opinions on crypto? So if there is an ETF, does it mean there's going to be a stampede of Main Street investors who come in, due to hedge fund managers or pension managers, or just financial advisors who say, hey, you got to have 2% or 5% of your money in something like Bitcoin as a hedge? Or are those guys pretty solidly against crypto, or what's their sort of stance on it relative to the general public?
I mean, I think we can assume that a big chunk of them are anti-crypto right now, right? I think that's going to be pretty fair to say. But some of them are definitely pro-crypto, especially the younger ones. I've talked to some of these guys. I know some of them are pro-crypto, and they don't have the safety net right now to recommend this kind of stuff, right? They're afraid they're going to get fired, right? But once Blackrock releases their ETF and suddenly Fidelity has it too, and everyone's got it, and it becomes a more natural, normal thing, there's a little bit of coverage for these guys to be able to start to recommend it in small doses, not necessarily in large doses, but in small doses. So I think we'll see some of that right away. And then the question will be, basically, if crypto is successful, then all the anti-crypto guys are either going to start lying and saying they were always pro-crypto, or they're going to be out of a job. I mean, one of those two things is going to happen for the most part. Or they're just going to switch and say, like, hey, I was wrong. But mostly they don't. Financial guys don't say they were wrong. Mostly.
No, usually they don't. It's a rare financial guy who reviews his the things that he suggested investing in the beginning of the year at the end of the year.
I mean, I mean, Peter Schiff, who's the notorious gold bug from forever ago, has been anti-Bitcoin for the last 13 years and has been tweeting about it. And his tweets are hysterical because in 2011, he's saying what a terrible buy is. Bitcoin is at $1. And then in 2015, he's saying what a terrible buy it is at like $800. And then in 2021, he's saying what a terrible buy it is at like $35,000. And he never will back down. He's just always saying, like, you're all fools. You should all be buying gold. When the price of gold has barely moved in the last 13 years too. And it's just wild. I mean, at this point, maybe he just sees it as his brand. I don't know. But it's wild to see him be so intractable, when he could, in theory, say, like, Bitcoin has proven that it's now got some history and it's got some network effects. And so I'm going to make it part of my portfolio. I'm still mostly a gold guy, but I feel like I do need to hold some Bitcoin, even as a hedge against what the young people might be doing. And where this, like, I would hate to see all the value go out of gold and go into Bitcoin and not have any of it, which is what anyone who's seriously into gold should at least be thinking about, right? Yeah. That should be an actual concern for them. I don't think it is for most of them right now, but I don't know that it won't be in 5 years. And if that starts to happen, look out. Like, then Bitcoin's going to have gold's market cap and more, and it's going to be heady days for crypto investors. But right now, Peter Schiff remains completely stubbornly planted in as he has been for 13 years. So I don't know if he's going anywhere.
Yeah. Well, over the past couple of years, there's been some surveys that have been done, including a Harris survey, that showed that millennials were more comfortable with or thought that Bitcoin would be a better store of value than gold. So let's see. We've got another one that is from
no young person. Mm-hmm. Yeah, no, as you look at that, no young person wants to buy gold. Pretty much almost none of them do. No one's interested in that. If they're interested in buying store of value type investments, Bitcoin is clearly one of the things that they're considering, and gold really isn't. Obviously, that's not true for 100% of the demographic, but a really shockingly high. Like you have how old is your son at this point?
He's 12.
Right. Like he has no interest in buying gold, but I think if he had the option, he might buy a little bit of Bitcoin, or he might want to own a little bit of Bitcoin.
During the last bubble of Bitcoin, when you were hearing about it, he asked if we could get some Bitcoin. Yes.
There you go. I have a 14-year-old nephew, and for his 13th birthday, I said, "What do you want? I'm willing to spend like $300 on whatever you want, basically." And he said he didn't know. I said, "Well, here's some options. I could, just get you an Amazon gift card, of course, but I could buy you like a like a console. I could buy you an Oculus. I could buy you crypto. I could do this. I could do that. Whatever you want." And he's like, he decided he wanted crypto. And so I bought him $300 worth of crypto. That was his gift that he was excited to get. And I mean, that's kind of interesting to me, right? Like, I don't think a 13-year-old would say, "Yeah, give me $300 worth of gold," very often. Not very many 13-year-olds would say that. But like, we got two examples anyway of these kinds of kids who have at least some level of interest in this. And I don't think that's going away, partially because they understand digital assets better than adults do, better than old people do, right? Because they lived with that in the video game system. That's part of it.
I don't know if for a 12-year-old and a 13-year-old, whether that's the case. I think it's more that it's just in the zeitgeist, and they're watching YouTube videos.
Okay.
And they're hearing about Bitcoin, and
You're mostly right. But there is something to the idea that these video game kids who understand that you can own something that you can't touch ever, that's just in the cyber world. They own like something in the game, a piece, a sword or something like that that's unique. They get that. That means something to them. That doesn't mean something to like most people though. Like the idea of an NFT to most people is like, that's stupid. Why would you ever want that? Why would you want an NFT of the Mona Lisa when you can have the real thing? And it's like, that's not exactly how it works. But like kids get that better. They understand that more intuitively because they have these other experiences. That's all I'm saying. Of course, you're right. It's mostly just about the buzz, right? The excitement, whatever it may be.
Okay. Well, from a skeptical vantage point, and in the comments sections that I was referring to earlier, there were people who occasionally someone would sprinkle in hey, this is like Beanie Babies, or this is like Pokemon cards. A few years back were the things that were the crazes that young people at that time were really into those things that, and I don't know about Pokemon cards, but with Beanie Babies, for example, they had a bubble that crashed. And so they're worth a lot less now than they were then. So whether, the buzz by itself is not enough to engender or to make a decision on a good investment. Usually anyway, there's got to be more behind it than that. So I think kids go for the buzz, and I hope you're not suggesting that anybody follow investment advice from a 12 or a 13-year-old.
I'm certainly not, but I would say that adults go for the buzz too. And in fact, every time any bubble happens, it's basically froth from adults. So like acting like it's just children is insane. Adults make all these bubbles happen all the time. You fool.
So what percentage of the people, I saw something, this goes back maybe 6 or 8 months, that was saying that there was a slight majority of people in the crypto market who had bought in while the prices were higher. So of all the people holding, that there was more people who were losers than who were winners. And obviously the people who were winners many of them were big winners like yourself, where you got in early enough where it's like, yeah, you can crash down to 20 grand, but hey, I got in when this thing was $1,000. And so, that's still a massive win. So I'm just curious, now that we're at 35, 36,000, is it that the majority of the people in the market are now winners, because it seems like in the past, people start to buy in once there is this crazy buzz and the prices go up to close to all-time highs, and they're the ones who get stuck, holding the bag for a loss when things dip back. Whereas the people who were in earlier are still like, I'm good for the ride and I'm going to hold on for the next bull market run.
I mean, let's be clear. Humans as a species basically can't help themselves but to buy high and sell low. Like, as a species, that's what we do. And it sucks, and I wish we didn't do it. And I don't think we have to do it. I don't think individually we have to do it. But as a species, we continue to do it, and I don't expect that to ever change, be it crypto, stock market stuff. any other investments. That's how we act. We panic. We get excited as the number goes up because it verifies something to us, and as it goes down, we want to get out without losing everything. We get out then, and we take our losses and move on. And for some investments, that's probably the right move, right? But then for other ones, which have, if you understand what they're there for, if you can see the bigger picture, the panic sell is not the move. And you have to be right some of the time, but I would say that. So we're always going to have that. But right now, I would guess until we hit like 45, 50,000, we'll probably still have, quote, the majority of people who own crypto are losers. But I would also say, I see those balloons. I would also say that probably those people don't own that much crypto either, right? They probably bought $1,000 worth of crypto, have held it for a long time as the number dropped, and we're waiting for the thing to come back. I'm sure there's some people who spend a lot of money too, of course. But I would say a lot, like it's the majority, but that's, it doesn't mean it represents a huge amount of money necessarily, just because it's the majority of people, right? So I think that's important too.
That makes sense. So there was a story this week about, was it Singapore? I think it was Singapore, who's going to come out with a digital currency next year.
Singapore.
And so, another country coming out with a digital currency, and it's going to be for, I think, the wholesale financial sort of network behind the scenes where banks can instantaneously, transfer funds from one bank to the other.
Yeah.
When you hear that type of news, what are your thoughts in relation to the impact that can have on Bitcoin, Ethereum, and the whole crypto marketplace?
I mean, I think it ultimately speeds up adoption, this kind of stuff, because this is all happening no matter what. Like there's going to be central bank digital currencies in every major industrialized nation. I don't know exactly when, 10 years from now, I would think certainly, and probably be the majority of the cash or the fiat of each nation would be CB, central bank digital, DCs. So, and I think it'll help people understand more sort of how this stuff works. And when people say, well, it's people will be able to say, well, it's like the Fed coin, except you have full control over it instead of the US government having full control over it. And they can't track you when you use this one instead. But besides that, it's just like Fed coin. It's a $1 coin just like that. It moves just as quickly. It's just as cheap to send to people. And I think it'll make it easier for people, not harder, to adopt this and see the value of crypto sort of in their general lives, but also what it could be, what Web3 can be, as opposed to what's being presented as their main options, which are a surveilled, government-controlled currency, which is what all CBDCs are ultimately going to be. Yeah.
Okay. I was listening to an interview with Morgan Housel recently, he's an author and he's come out with a couple of books. He just come out with a new one. But his last book, which was about money, and about wealth. I can't remember the name of the title, but it was quite a hit, that book. Do you remember the name of that one?
Is this The Psychology of Money guy?
Yes. Yep. The Psychology of Money. And so one of the things that he was saying in this interview is that, the thing often that affects people's finances in the biggest way is a complete surprise that is just impossible to call in advance. He was referencing the Great Depression and 9/11 and just, with the Great Depression, there was, Professor Schiller, who's, won the Nobel Prize. He went back and looked at the Great Depression and was like, was there anybody who called the Great Depression? And apparently there was zero economists or financial experts who called the Great Depression. Some people might have been calling for a recession or for the economy to slow down, but nobody was calling for a Great Depression. And that had a massive impact, obviously, in the US and across the world during that decade and a half. And then with 9/11, similarly, and you could also say that to some extent with something that we lived through, which was the financial bubble in 2000, where there was the first internet boom, where, there were some people who were skeptical, like Warren Buffett, but it just kept going so high that most of the skeptics got sort of burned out and fell by the wayside. And, when there was that talk of there being some irrational exuberance in the market, that slowed things down like just a speed bump. Things kept roaring ahead for quite some time before they then, crashed and crashed hard. And And so that made me think about, the team that we both support, that in our younger days was like, this was a pretty poor football team through most of our fandom. And then we got to this time where in 2002, all of a sudden we've got Belichick and Brady winning their first Super Bowl, David versus Goliath type story. And then if at that point, at the beginning of that season or the season before, you said, hey, this team is going to be the biggest dynasty of the first 20 years of the millennia, they're going to win 6 Super Bowls, you'd say, come on, that's just insane. That's crazy. And now here we are on the flip side of that, riding that roller coaster back down towards being like, a super poor team. So as far as guessing the future, I guess is what I want to bring this back to, and Bitcoin and Ethereum and crypto. You're on the side of guessing the future where we're headed towards a crypto world, and crypto is going to be a part of our financial infrastructure in a much bigger way than it is now. And we're in the early stages still, and something like Bitcoin and potentially Ethereum are going to be worth many multiples of what they're currently worth. And your reasons for that are actually playing out. And we've had this discussion for long enough that some of those things I've been skeptical about are sort of really going your way, as far as like it seems like the wave is breaking in such a way that Bitcoin is being much more widely accepted as a store of value, discounting the people I'm seeing in the comments section. And Ethereum is the one who's in the lead for backing up the infrastructure of a lot of these smart contracts. So if things carry on without any major surprises, then I too would anticipate that we're looking at a year next year where Bitcoin's worth $50,000 per coin or more, and that Ethereum is worth what, $3,000, $4,000, $5,000,
$10,000. Come on,
$10,000 next year. Wow,
absolutely.
My goodness,
come on.
So
eventually,
how much, mental real estate.
Sorry, go on. But go on.
Yeah.
Do
you like?
I see what you're asking.
And this maybe also speaks to how far the skeptical point has sort of been marginalized with what's happened over the last 6 months to a year. But I'm thinking of things like, let's say there's a EMF, that explodes, that worldwide there's some type of EMF that affects the infrastructure of the internet, or there's a solar flare that basically takes out,
look, if aliens attack and just kill all humans, the value of Bitcoin will likely drop. I'll grant you that. My investments will be worth a lot less. But beyond that, I want to say that the Web3, Bitcoin, Ethereum, these things are anti-fragile assets. They get stronger as the things around them crumble, right? So, like, if everything just goes according to plan like normal, these assets, I think, are going to grow as they get adopted by more and more folks, because it just makes sense to. And we see like central bank digital currencies happening or beginning to really happen, and ETFs beginning to happen, and all these other things beginning to happen. But if things were to get worse in some way, most of the bad sort of scenarios in the world might strengthen crypto adoption, not weaken crypto adoption. That's not true for every scenario, of course. But that's true, I think, for the majority of, quote, bad scenarios. This is not a great example, but thinking back to even the Russia-Ukraine war, where that sort of happened out of nowhere, and people were able to send Ukraine hundreds of millions of dollars instantaneously via crypto. Ukraine put out an Ethereum address and a Polkadot address and another and a Bitcoin address saying, like, go ahead and send it to us if you want to give us donations. And people did, and they were able to get it right away. And that's an asset that the Ukraine was able to immediately flip into weapons and whatever else they needed, supplies. And that's much faster than dollars can move and banking systems can move. And it, now on the flip side of that, of course, Russia was also saying, like, hey, you know what? Fuck dollars. We'll accept Bitcoin for oil now, So like as things sort of crumble a little bit, that's not huge crumbling. Crypto adoption strengthened, that didn't weaken. That's a fairly extreme example, but I think that's true in general for financial markets too. Even if we have another global financial crisis, which I expect we're going to have at some point, we have them every, 15 years. We'll have another one. Maybe we just had one sort of with COVID, I guess. So perhaps the next one is 10 years away, but we will have another one. And sure, all risk on assets, including crypto, will drop for a while. But then I think we'll see, just like we saw with the last one with COVID, actually risk on assets did unbelievably well in the face of this, right? Real estate went up, baseball cards went up, comic books went up, and crypto went to the moon also. Everything went crazy. It went the other way. And people like you and me at first were selling our stocks because we were like, oh God, we need to have cash. Everything's going to drop to like a rock. And in fact, that's not what happened, right? So I actually think there aren't that many bad scenarios left. Of course there are some, but like a lot of the normal, like, oh, you can't plan ahead for everything kind of scenarios. Crypto is kind of built to be stronger in those scenarios that we haven't planned for rather than weaker. They don't rely on centralized authorities. You know, you can't just take out Bitcoin or Ethereum the way you could take out, you know, the US Treasury, let's say, or you could hack the US Treasury or fuck it up. And you can't do that to Bitcoin. That's not possible. So there's certain things that, you know, a permissionless sovereign currency, which it just is more powerful, and people will see the value of it sooner, I think, not later, if indeed things that we aren't expecting happen.
Yeah, it is pretty remarkable. You know, the COVID would be another one of those things that, you know, nobody anticipated, or not, you know, was not very widely anticipated, and had a massive initial impact on, you know, stocks dropped so much. Bitcoin dropped down to close to $3,000, I think.
Yeah. Ethereum dropped to below $100.
Wow. So when there's a liquidity crisis, that a lot of money comes off, the asset prices go way down, and that could include crypto. But it did bounce back quickly, and it seems to have bounced back very quickly because the government just infused so much cash in, and a lot of us, including me, underestimated the impact of that in the short term. But, you know, I look at Japan, who had a couple of lost decades where they had this kind of stagflation, deflationary spiral that they went into, and a debt crisis. And their real estate prices, their stocks just went down for decades and never recovered those all-time highs for basically a generation, you know, and they're just kind of getting there now, however many years later it is, 30, 35 years later.
Yeah.
And so it seems like we're heading towards some type of debt crisis in the US because of the size of the deficit combined with the current interest rates. So unless something happens where they're able to lower interest rates because inflation has slowed down enough, or regardless of inflation, they have to lower interest rates, then asset prices in the US, it seems like, are going to follow a similar pattern. So I just wonder how Bitcoin and Ethereum do, and if that scenario does play out.
I'm sure there'll be an initial drop and perhaps an initial crash, just like I assume that would be true for all hard assets in that time. And crypto would crash harder because it's more volatile. But crypto's like, to compare it to real estate is a little bit unfair to real estate in some ways, because if the US has a debt crisis, that's I assume you know more about this stuff than I do, but I assume it's really going to hurt real estate prices in the US. But it wouldn't necessarily hurt real estate prices across the world, not too much anyway, right? It would like probably touch them, but it wouldn't probably have a devastating effect. Is that true?
It depends. So the last credit crisis that we had, it did bubble over and spilled across the entire world, and so most countries, with a few exceptions, had their real estate prices drop pretty significantly. But it doesn't have to. I mean, look at China's having a real estate crisis right now, whereas prices in the US and in many other countries are as high as ever, you know, and continuing to go
Interesting.
higher.
So hard to know. I was going to make the point, but maybe incorrectly, that like Ethereum is a worldwide asset that doesn't just depend on the US market the way like the US real estate does depend on the US market very directly, right? But perhaps the spillover is such, or the potential spillover is such that I'm wrong. It's less clear than I was hoping for. Anyway, fair enough.
Well, I want to look a little more closely before we talk again at Japan and what happened there when they basically had their period of stagflation, and if that were to play out in the US because the debt levels are so high, then how did that affect not just real estate, because we're pretty clear in Japan that real estate, went down and stayed down for decades, and stocks did the same. But what about, like you said, gold is a worldwide asset, so it wouldn't have just been tied to Japan. So Bitcoin is also a worldwide asset.
Yeah.
So unless you have kind of a worldwide slump, but the U.S. is such a big country, and we're even thinking about the ETF having it's U.S. based and having such an impact that it's going to bump it up to 50 grand or whatever it might be. So
yeah,
we've got to think the downside is significant too.
I will say that I think we're going to look back on this era. You specifically, you're going to look back on this era with some level of regret, and the regret will be that looking around and using all these historical points of comparison are all about governmental monetary policy. But crypto doesn't have governmental monetary policy, right? Crypto's got its own individual monetary policy. Like Bitcoin's got its monetary policy, which is it produces currently, oh God, I'm going to get this wrong. It's been a while. 6.25 Bitcoin every day. I think that's really wrong. I think it's like 18, but whatever it is. And then it'll have in May, right? And Ethereum has its deflationary monetary policies. And these are all, Ethereum can change their monetary policy. In theory, any of them can change, but they're very, very hard to change. You need to get a lot of people in agreement to change these policies. Very, very difficult to do at this point. So like Bitcoin's got a completely predictable, completely known, completely sound monetary policy, while everyone else is either printing up fiat like crazy when necessary, doing all these other things. Other assets like gold, for example, if the price of gold zooms through the roof suddenly, it triples the way Bitcoin's price can triple. I don't think this will happen with gold. It's unlikely to triple, but if were it to, then what would happen is everyone would dig for a lot more gold, and suddenly there'd be more gold than there is now. Like it wouldn't be the same percentage of gold every year getting dug up. It'd be a lot more, right? So that would bring the price back down, right?
Yeah.
Housing. If housing prices keep going up, I see around what they're doing in my city. They're building more places. They just keep building. If housing prices stop, they'll stop building. I saw that in Vegas during the global financial crisis. So you can respond to these things, right? The assets respond to the current monetary policy, but Bitcoin just prints the same amount of Bitcoin every single hour, no matter what. And I think looking back, it's going to be easy to be like, that clearly meant something. That was a valuable thing about that asset that we weren't really looking closely enough at. That there's the other assets will rise or shrink to their price points to some degree, right? Oh God, real estate does no value. Stop making houses. There's less volume, and that'll bring the price back up. Real estate has a lot of value. Make more houses, and that'll bring the price back down. And it creates sort of an equilibrium price. That's just not true with crypto in the same way. At least Bitcoin and Ethereum and the main players. And I think you're going to look back on it and be like, I wish I had seen that a little more clearly, because that was a type of value that we couldn't see how useful that was, but it's going to end up being. You're going to be like, God, he was right about that, man. He was right about that in so many things. That's what you're going to say.
Well, I regret, not buying crypto years ago when it was cheaper and putting a small amount of money into it, where that small amount of money could have turned into something massive. So no doubt about it. But the truth is, you can't know in the past what you know now, obviously.
Of course.
And it's also easy to have that kind of hindsight bias where it seems like, well, of course this was going to happen. Where maybe there's a whole lot of alternative realities where, for one reason or another, this didn't happen.
Sure.
So that's something that I remind myself to feel better about the whole scenario, and also that a wise man once told me. This is an Argentinian saying, apparently, that you don't have to eat the whole cow. And what he meant by that was that you can have enough of whatever the resource is to satisfy your own needs and having a good life without needing to have it all. So I thought that was it's useful to hold on to that as we're kind of going through life, making our way. Now, about 8 months ago, maybe 12 months ago, I asked you at the end of a podcast, do you have any alternative investments that are not in the crypto world that you think look like they could be of good value at this time? And obviously this isn't investment advice, it's simply entertainment. But at that time you said Meta you thought looked like it was cheap. And I think it's 3x'd since then. So well done with that call.
I mean, I didn't buy any Meta. I just was piling into crypto. So it just was a thing I said. It doesn't,
Yeah.
So I don't want to take too much. If I had any real conviction, I would have put money behind it. So I don't think I get too many points for that, but thanks.
Is there anything else outside of the crypto world that you're looking at the moment that you think offers good value as an investment?
I mean, I can't really imagine having money that I wanted to invest in not putting into crypto right now. So the answer is ultimately no. But if I was deciding to do that because I wanted to be diversified right now, like this to me is the worst time to be diversified around crypto. Not like later is the best time. And maybe in a year and a half is a great time to be diversified. Right now, I wouldn't have any interest in that. But if I was interested in that, the things I'd be looking at are still virtual reality, which is what drove my Meta recommendation. I think that still is unquestionably the future. And I don't know if it's actually Meta who's going to be driving it or not, but VR companies, I think, are absolutely going to own personal entertainment, and maybe a lot more than that. Just own the space. I think AI, this is not a surprise, but AI continues to have astounding developments on a weekly basis right now. Oh, there's a new thing as of like 2 days ago with a GPT add-on, basically, a GPT like app for ChatGPT, where it's a typing app. And you can now, even if you're a bad typist, like you're a terrible typist and all that, you can just mash away and never look at the keys and never look at the screen, and GPT will figure out exactly what you're typing. And you just look like once every like page or so, and it's almost perfect apparently. Like I think it needs to learn you a little bit. Like it has you do like one thing where you type a little bit, and it's like, oh, okay, I see kind of. But then you're supposed to go like as fast as possible and not even think about it. And apparently it's nigh perfect already. Like this stuff is so far beyond the kind of stuff we even are thinking about right now. It's going to change so much of the world in a relatively short period of time. So I think if you can find ways to invest in that, that's not a bad idea either. So I guess that means Microsoft has got to be at least the blue chip play because they own a big chunk of, not all of OpenAI, essentially a big chunk of it. They're big investors in that. There's certainly going to be a whole bunch more AI companies, and trying to figure out who's the picks and shovels of AI might be a good idea. I don't know if we know who that is yet, and what that is. But there's going to be something that everyone's going to need and want. It's going to be a gadget. It's going to be, that stuff. That's what you want to be in on if you can be in.
Fascinating. With the typing, I was imagining I've been playing guitar since COVID hit, and just bit by incremental bit, getting some improvements. And I'm just imagining, like, if with the typing you could have an AI version of the guitar where you could just shred and just play like crazy without needing to spend years and years building up those skills.
I mean,
exciting.
I think maybe.
Yeah. Great. All right. Excellent talking to you. And I look forward to our next discussion.
Indeed. Excellent talking to you, sir.